Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jezoshek, CPA.
Hello and welcome back to another episode. I am your host, Mike Jezoshek, and today we're talking about reimbursing yourself for business-related items. And so this comes up often. I have business owners that come to me and said, hey, I paid for items personally that were business-related. How do I record that in my business? Or maybe I have items that are business and personal mix. How do I report those? Should I run them through the business or run them through personally? What is the best treatment of that? And so questions like these are something that come up often, and we kind of want to talk through them and talk through what are the situations, depending on your entity structure, what are situations and when we would do that. So first, I want to make this very clear. If you have an expense that is 100% business related, just run it through the business. Don't worry about it. Just run that through the business. When we think about reimbursements and reimbursing yourself, these would be for items that you accidentally paid for personally, that's 100% business related, or items that you paid for personally that have a business use to them, a business and personal use to them. And I would say, generally stating, we say if you have a business and personal mix item, we would say pay for it personally and then reimburse yourself for it from the business. And we talk about reimbursing, we just got to make sure that we're doing it properly. But that can be a case-by-case scenario. So how we reimburse ourselves is going to depend on how our business is organized. So if you're organized as a sole proprietorship or single member LLC, you're a disregard entity. Basically, you are filing your business tax return on your personal tax return. So you don't need to have any kind of formal reimbursement policy for reimbursing you as the owner. You're just going to take a tax deduction for that item on your Schedule C when you're filing your taxes. So if you have financials for your business and you paid for some items personally, you're just going to add those personal and related items to the business. And as long as you have record for them, that's totally fine. If it's something like mileage or the home office, there's going to be a section directly on the Schedule C that you can enter those items. You can take advantage of that. If it's something like your cell phone or something like that, you would again add that to your Schedule C, add the business use percentage to your Schedule C when filing your taxes. If you also want to just transfer money from the business to your personal account for that, you could do that as long as you have that backup. So for a Schedule C, a single member LLC, a sole proprietorship, reimbursing yourself is pretty easy. You just take the deduction on your Schedule C when filing your tax return, or transfer money from your business account to your personal account, record it as a business expense, and just provide the proof of, hey, you paid for it personally and what was it for. Now, I would say this. If you have employees in your business, then you might want to look at an accountable plan, which we're going to talk about next, but you might want to look at an accountable plan if you're going to be reimbursing them for anything. As a business owner, just take it on your Schedule C. But if you have employees, you might want to look at an accountable plan to make sure we have a proper setup for that. So that's sole proprietorship, single member LLC, pretty straightforward. Make the reimbursement, take the deduction in your Schedule C, very easy. Now, if you're operating as an S corporation or a C corporation, those are going to be handled a little bit differently. Remember, as an S corporation, you're an employee of that business. You're a physical employee. And when employees are reimbursed from the business, they need to have a plan in place. They need to have what we call an accountable plan in place. And the IRS requires this. So if you make a reimbursement from the business to you personally without an accountable plan in place, the IRS could come back and disallow it and say that's not allowed. And this is why accountable plans are so important. So this is something that we want to put some focus on. Again, so sole proprietorship, single member LLC, just make the reimbursement, take the deduction. If you're operating as an S corporation or even a C corporation, you need to have an accountable plan in place, and then you're going to reimburse yourself utilizing that accountable plan for the business-related items that you paid for personally. And accountable plan is just a fancy word for reimbursement policy. Basically, it's something that outlines, okay, what are we reimbursing? How often are we reimbursing? And what does that look like? And it's something that just proves to the IRS that, hey, we have a plan in place for this. We have support for this. We have organization and structure around this, and this is how we're going to follow that reimbursement. And that accountable plan, again, like I mentioned, is absolutely vital to get a deduction for that reimbursement. The accountable plan is the tool to make sure that that reimbursement is being done according to law and that the IRS will accept it. So what is an accountable plan? How do I set it up? And the tax rules don't actually require that you have a written accountable plan in place. However, we always recommend it because it makes it clear to both you, your employees, your business, and the IRS if there was ever an audit that comes into place. So there's 4 major requirements when we talk about this idea of an accountable plan: a business connection, substantiation, no excess payment, and timeliness. And so let's walk through each of those, just kind of go through them a little bit deeper. A business connection. Basically, the expense has to be a valid business expense that occurs in the normal course of business of your business. So just as if you would run anything else through the business, it has to be a business item. We can't buy a couch for our living room that has no business use and just say, hey, business, we're going to put that on our accountable plan and reimburse it and get a business deduction for it. No, we have to have that business connection. It still has to be a valid business expense, ordinary and necessary business expense. So that one's kind of obvious, but I do like to put that in there just because I think it is something that the IRS would look at. The second piece is substantiation. Employees, and you're an employee of an S corporation, need to submit proof of that particular expense. So think of this as like an expense report, a mileage log, a receipt, whatever it might be. This is going to provide substantiation. So you need documents that prove that this expense happened. So basically it's saying, let's use that couch as an example. We can't say, hey, business, I bought a couch. It's got business purpose for it. Reimburse me $2,200 for it. The business needs to have a receipt. They need to have support for it, documentation for it. Again, just like any other expense that we'd run through our business. So the first 2 are easy. It's very common. It's very simple. It's very similar to any other expense we take. Have a business connection. Is this business related? Have substantiation. Can we back it up to say, yes, I paid for this personally. And yes, it's business related. I have a receipt for it. I have an invoice, something that backs that up. The third piece is no excess payment. So if there were reimbursements that were made over and above what the actual cost for it was, that needs to be taxable wages. So let's say we bought a new desk and the business said, yep, we'll reimburse you for that new desk. You paid for it personally, and that new desk was $500. If the business then reimburses $700, they made an overpayment of $200. That overpayment of $200 needs to be considered taxable wages because it's over and above the actual cost of what they had. So make that clear. And then timeliness, that reimbursements, that substantiation that received, all just must be done in a timely fashion is what the IRS says. That's the requirements of setting one up. Setting these up is fairly easy. We have in our program, in our tax minimization program, we have kind of a sample written policy you can put in place. Again, this just helps put some bulk and meat on that accountable plan. We have a template that you can use as an expense report to record all that activity. And then the final piece is making the payment. So if you're looking to set up an accountable plan, first off, I recommend adopting a written reimbursement policy. And basically this just says everything that we just talked about. It says, okay, what are we able to reimburse for? Business connection. What do you need to provide as proof to back that up if a reimbursement is made? Substantiation. Saying, hey, if we make a reimbursement over and above the amount that you paid, it's going to be taxable wages. That's that no excess payment. In timeliness, saying, hey, you need to submit your X report in X amount of days, and then we'll reimburse you 15 days after that or whatever it might be. So I always say, adopt a written reimbursement policy. That's the accountable plan. That's the physical accountable plan. The next thing I would say is create an accountable plan template or expense report. And so for business owners, this is going to be just an Excel document. And again, within our program, we have a copy of one of these, but it's just an Excel document that you're going to record all of these items to help back that up. So if you're reimbursing for the home office, if you're reimbursing for automobile, all those items, you have this document that's recording, okay, what amounts make up that home office? How are we doing that calculation? Again, this is just going to help determine what amount are we reimbursing and help provide proof to say if the IRS comes knocking and say, how'd you determine this home office item? We can say, okay, here are the costs that went into it. Here are what we're using for the square footage and everything else. So recommend having a template or expense report sheet put together. And again, the final one is make the reimbursement. Actually make that payment. So if the reimbursement for the accountable plan is $1,233.17, make a payment from the business to your personal account for that. keep records of everything, keep receipts of everything. Again, just if it's a normal business bank account. So I want to make that clear. Just because it's an accountable plan doesn't mean that, hey, we can drop our guard. We don't have to have record of everything. We don't have to support anything. No. Everything stays the same. It's just you paid for it personally. You want to get a business deduction for it. We're going to reimburse you from the business to your personal account. Still need all that support documentation to back it up. So when we look at accountable plan example, what are some areas on when would we use an accountable plan? The main ones, and again, if you have a business related item that you paid for personally, you're going to use an accountable plan for that. If you have an item that is business and personal use, you're going to use the accountable plan to reimburse yourself personally for the business use of that. If you have a business item that's 100% business, just pay for it in the business. Don't worry about an accountable plan. Use the business bank account for those items. The accountable plan is for those items that you accidentally paid for personally or items that you are paying for personally that do have a business use to them. So when we talk about small business owners, the first one that comes up is home office. As an S-corp owner, you get a home office deduction. And so if again, look through our home office episode, but assuming that you qualify as a home office for your business, you can get a home office deduction. You're going to use an accountable plan to reimburse yourself for that home office item. Automobile. If you have an automobile that's owned by you as the owner or employee of your business and not actually within the business, you're going to use the accountable plan to reimburse yourself for the business use. If you're using mileage, you're just going to use the mileage rate. If you're using actual, you're going to use the accountable plan to reimburse yourself for the business use of that, all those actual expenses, the depreciation, the interest expense, the oil and gas and maintenance and all that are all going to be part of that reimbursement. Travel, we see often, parking and tolls, business meals, tools, equipment, dues, subscriptions, license, cell phone, and internet's a big one. Oftentimes you're going to be paid for that personal because it's got some personal use to it, but there's going to be a lot of business use for that. So cell phone, internet, training, development, things like that. Again, the whole idea about the accountable plan is to reimburse yourself for items you paid for personally that are business related. So let's kind of wrap this up. As a sole proprietor, again, or a single member LLC, reimbursements to you do not need a formal plan. You just take them on your Schedule C. Now, if you had employees, you might want to utilize an accountable plan to help document and support reimbursing your actual employees. As an S or C corporation, you're considered an owner or an employee of your business, and you would need to have an accountable plan set up in order for the IRS to allow that reimbursement to go in place. Without a proper accountable plan in place, the IRS could treat that reimbursement as wages for tax purposes, which would cause unintended employment and income taxes and everything else that you don't want to deal with. So put some time in to set up an accountable plan. Again, these are fairly easy to set up and can really save you a lot in the event that the IRS comes knocking. If you have employees outside of yourself as the owner, you're going to want to have a specific accountable plan for the owner that may be different than your reimbursement policy or accountable plan for your employees. So think about that. And remember, if an item is 100% business use, save the extra effort and simply just run it through your business bank account. Accountable plans are specifically for business items you accidentally paid for personally or items that you paid for personally that have a business and personal mix to them, and you want to get a reimbursement for that business use. Hopefully that was helpful. Accountable plans are so important, as we talked about with vehicles last week. An accountable plan is so important if you're an S corporation or you're a C corporation to make sure you're getting a deduction for that. Fairly easy to set up. We have templates. We have written policies in our tax minimization program that just help make that whole process a heck of a lot easier. But the important thing is making sure that you're doing it the right way, or it could come back to bite you. Accountable plan is something I would set up now and make sure you're going through those items. One thing that we always talk about with our business owners is go through your personal credit card, go through your business bank account, and go through those items that you're spending there and think about, is there a business use to any of these items? If so, let's get reimbursed for those. And then in the future, maybe run through the business if it's 100% business use. Maybe you went out to lunch with a friend of yours that was business related. You talked to them about how your business is doing. You asked them if they can send some referrals to you. That's a business meeting. Even though you thought you were having lunch with a friend, that could be a business meeting. These are some of the opportunities that come up, or these are some of the situations that come up where we're like, oh yeah, there was some business related items for that. We can use an accountable plan now to reimburse ourselves for that item that we paid for personally. So now is a great time to kind of do that exercise, put an accountable plan in place, make those reimbursements again before 12/31, because once 12/31 hits, a lot of that gets out the door. And so as we finish out this year and as we go into the next few weeks and next few months, we're going to be talking and continuing this discussion about what are some things that you can be doing in your business as we're coming up on year end to pay the least amount of taxes legally possible here in 2023. This is just one of those episodes. We started the last few weeks, and we're going to continue it as we get closer to year end. So I wanted to put this one near the front because it's so important. It might be something that seems so simple, but it's also so important for you and your business because we want to make sure we're dotting our I's, crossing our T's, taking the deductions in a valid way that the IRS is going to accept and we're going to be able to move forward with without having to worry about losing a deduction on. So hopefully that was helpful. I look forward to continuing this discussion of how can we save the most in taxes as legally possible in 2023 in the coming weeks. I will see you all next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.